Hi everyone, Kip Herriage here. Hope you're all doing well as we struggle through coronavirus insanity together. I wanted to get a new video out just to give you our thoughts on the markets, our thoughts on what's happening with this virus and this global pandemic, and what the Federal Reserve is doing, what the market should do, what the VRA Investing System says. So let's get right to it. First of all, for all our new folks here, welcome. My name is Kip Herriage. I've spent 15 years on Wall Street, been in the investment business 35 years. After taking 7 companies public, raising several $100 million, working with some of the wealthiest and most successful companies and individuals in the country, retired at the age of about 38 in 1999, 6 months before the dot-com talk. Got my clients out of the market, started the VRA in 2003, got them into precious metals and miners right at the beginning of that move higher. Then we forecast the top of the financial markets in 2006, which has of course led to the housing crisis and the crash. And then we got back in at March, went very long, March of 2009 at the bottom. Wrote a book about Trump winning. Trump won, predicted the move higher that would follow, and that happened. And now here we are. So made some pretty decent calls because of pattern recognition. That's really what my mentors taught me. Had some of the best mentors anyone could have had as a young financial advisor. And pattern recognition really is the basis of what technical analysis is all about. And there are some patterns that we're now seeing repeating. And those are really an investor's best friend, repeating patterns. So I'm going to walk you through that as well. But first, a couple of comments about coronavirus, because we've been consistent on this. If you've been joining us for our podcast, if you've been joining us for reading our blogs, if you are a VRA client member, you know we've been consistent on this. From the very beginning, we said this is a manufactured crisis. We took a lot of heat for that. We've never changed our position on this one single bit. We're certainly not going to now. Yeah, we've got a big death total, but you know what? Swine flu killed 500,000 in 2009, 2010. Nobody blinked an eye. The Dow Jones rose 40% that year. So what we see instead is a very, very much a manufactured crisis, in much the same with 9/11. So 9/11, what came out of 9/11? We got the Patriot Act, and we got in the Middle East, didn't we? Okay, $7 trillion, 6,400 lives lost. We know the story. That's what 9/11 did. Patriot Act was written in advance of 9/11 and then enacted just 2 weeks after. What happened in the 08-09 financial crisis? Wall Street, big banks took over. Not only did they cause the crisis, cause housing prices to fall, Goldman Sachs being the leader, the vampire squid that they are, creating these weapons of mass financial destruction and then profiting from them. Not only did they do all that, they got bailed out. I mean, it's the insanity of these patterns that continue to repeat. And now we have it with coronavirus. So I'm going to leave a couple of links with you here. One's a video. One's an article for those that want to get more into this. This is what we've been sharing with our clients and our folks here about what's really going on here. About the ruling class and their next move, very similar to what happened after 9/11, very similar to Wall Street and the big banks taking over the U.S. and global economy after 2008, 2009. And now what we're seeing here. Hey, if it's not your cup of tea, it's not your cup of tea. But this is how we prepare our folks for major moves. No, we did not see coronavirus coming. Did not see a 35, 40% drop in 3 weeks. But we were buying aggressively at the bottom. I will tell you that now our views have changed. We believe we are in a bear market and that we're in a bear market rally right now. The VRA Investing System sits at, we have 12 screens, 12 proprietary screens. This is a system I've created over 35 years in the business. And right now, those 12 screens, 8 fundamental, 4 technical, only 3 are bullish and 9 are bearish. So we don't have a choice but to be bearish. The VRA Investing System makes sure we're on the right side of the market and then make sure we're in the right sectors and the right areas to really profit from these moves. So we don't have a choice. We're bearish. We have to be. But we're not overwhelmingly bearish. I'll tell you in just a moment how we're positioned to take advantage of this. But the fundamental side of this is just so overwhelmingly negative that we don't have a choice but to take a much more defensive posture. And by the way, we've also been long precious metals and miners, 35% of our portfolio now for really close to 2 years. So these are the groups that are really going to do well with unlimited money printing that's in our near future. But when you see the reality of what's happening because of this manufactured crisis, and because of these really the insanity of lockdowns. They haven't worked anywhere they've been tried. There's plenty of evidence now to back that up. Look at what's happened in Japan, in Sweden, South Korea, Taiwan, Brazil. I can keep going. And they have weathered this crisis far better without ever locking down their economies, without intentionally forcing their economies into depressions, as we're doing here and other major economies as well. You look at the countries that have suffered the most from this coronavirus pandemic: Spain, Italy, United States, New York City. What do we all have in common? We all locked down. Most of the deaths are coming from nursing homes. It's an absolute tragedy. The people we should have protected, right? The vulnerable, the elderly, didn't do that. Instead, we had lockdowns. This is about the security state. This is about the ruling class implementing control on us. This is the only conclusion we can come to. But at the same time, and again, 26 million unemployed, in less than a month, air travel down 96%. Gasoline usage down over 50%. Rail traffic down 52%. This is all inside of a month. So these are absolutely depressionary statistics. There's just no two ways about that. The question is, how do we prepare for what's coming next? And we do have the Federal Reserve that is coming in with a ton of funny money. Matter of fact, central banks all over the world are doing just the same. And that should serve as a buffer. That the old rule of don't fight the Fed, that is one of our 3 bullish screens in the VRA Investing System. And certainly we have to be aware of that. But our view is that it's almost certain that because of the overwhelmingly negative fundamental side of the story, and just the devastation that's happening to businesses and individuals across the country, really around the planet, and the changes in consumer behavior. So this is something we've been talking about here for a while, that these are lasting changes that could be overwhelmingly negative for not just the U.S., but the global economy. And unless we reopen these economies rapidly, quickly, like now, that we could go into a multi-year, either deep recession or likely even depression. We're almost certainly in a depression right now. The question is, how long does it last? How long does it take us to get out of these lockdowns? But you look at the changes in consumer behavior that could be coming from this. People that are scared out of their minds. People that are watching mainstream media. The mass hysteria of it. These lockdowns only help to fuel that fire. President Trump did no one a favor, including himself. We'll likely be seeing President Biden come November because of just a really horrendous decision making, is all you can say. But if this is all kind of a planned a control, big government issue, maybe it's out of his hands. We'll never know those answers. But the point being, with consumer behavior that has us most concerned, is that with everybody scared to death, these are lasting changes in consumer behavior. Think about the hundreds of millions of jobs that are tied to the airline industry, tourism, travel, malls, hotels, restaurants. Who among these people that believe they can die if they simply walk outside their home without a mask on? We see people driving around with masks in their cars. Who of these people are going to get back on a plane, go back on a cruise line, go back to their mall, go to an office building even? We're talking about industries that employ hundreds of millions of people. This is our biggest concern about what could be a lasting issue here. The flip side, of course, is unlimited central bank funny money printing. That's certainly going to support the markets. No, that's the wild card. Look, in Japan and in China, central banks are already not only printing more money than ever, they've been buying their own equities. That's something we haven't done yet here in the U.S., something the ECB hasn't done either. So they've got a big playbook they can draw from. So it's very difficult for us to be overwhelmingly bearish, but we are positioned bearishly. I'll tell you that we have about 5 or 6 companies that we own that we call our VRA 10 baggers. These are companies that we believe will go up over 1,000%, have the potential to do that. We're not selling those. We're certainly not selling our precious metals and miners. This is the bull market of bull markets for this group. We're looking at gold. Bank of America just said $3,000. They raised their target to $3,000 an ounce for gold. We'd like to see it gets past $2,000 first, but we've been bullish this group for a long time. We continue to be bullish, but the miners, that's where the leverage is. That's really where the wealth is going to be made. It's from mining stocks, and we own those as well. We believe the very best ones. So there are pockets of strength that can be bought and should be owned. but we're also positioning for a move lower, at least a retest. That's the one thing that hasn't happened yet, and that happens in almost every one of these market crash scenarios, is you have at least some form of retest. We hit the March 23rd lows. We haven't seen any kind of a retest of those lows because, again, central banks came in aggressively. Government stimulus came in aggressively. Trump administration did some very good things with the payroll protection plan, and these SBA loans have really helped a lot of companies out. But again, it's the lasting changes in consumer behavior that we're most concerned about, and the fact that we never had capitulation. We never had capitulation. That's a big element of forming a market bottom. And here's what I mean by that. The sell-off, the 35-40% move lower, happened in 3 weeks. Happened so fast, all most people could do is just sit here and look at it and say, what are we going to do? Well, then we bottomed. I had remember the 1,000, 2,000 point down days, 10% down days, just absolute devastation. And then we bottomed because of central bank money. Well, we never retested. And that means most people never sold. And to get a real bottom, a capitulation low, most people have to think, okay, we're going to go into a depression. This is going to be ugly for years. Just get me out. Just get me out. That's capitulation. We didn't see that. We think that's going to happen. So again, we are negative here. We've been bullish for 11 years, folks. This is a big change. Again, went bullish at the lows of March 2009, stayed bullish all the way until really last week. But we see so many troubling signs fundamentally. And again, with the VRA system now being at just 3 out of 12 screens bullish, that we really don't have a choice. We're looking for a retest at minimum. Hopefully the government will get their, both in the U.S. and globally, will get their act together and start aggressively reopening these economies. Because if not, we are looking at a depression, and one that will likely last multiple years, and one that will hurt a whole lot more people than this coronavirus has or ever will. It's basically a glorified flu that targets the elderly. And that's the way we should have approached it from day one. Massive mistakes, either intentional or unintentional. We'll never know, but that's what happened. If you believe in repeating patterns, which we do, we're seeing awful decision-making from our leaders. Those tend to continue until there's a forced change. And that's how we're positioned. Come and join us. We've got a special going right now. I'd love to have you come join us here. We've got a great community, both in the U.S. and all over the world. We're very honest and candid with each other. We don't hold back. We go wherever our research takes us, and that includes the economics, the politics, the geopolitics, of course, the markets as well. Our goal has always been the same: to crush the market each and every year. We have net gains for both our VRA and parabolic options portfolio of more than 700% over the last year. And for right now, we're reopening the VRA, including parabolic. The next 3 parabolic options trades will be included there as well. So all the details are right there in your email. We'd love to have you come join us. Hope you're doing well. We will get through this together, and we'll get back to a bull market at some point. But right now, this is the bear market. It's a bear market rally. That's how we're positioned. And let's hope and pray that our leaders come to their senses. Be well, everybody. We'll see you again soon.